Hello and welcome to The Making Season 3 with me, Shereen Bhan, in association with HSBC. By 2048, India is likely to become the second largest economy in the world after China. That's as per the OECD's recent numbers. And till now, in this season, we've been connecting with Indian business leaders to understand how India has transitioned to a new phase of economic growth and the fundamental pillars that are charting the path of making this journey. If the recent disruptions have taught businesses anything, it is to embrace digitalization to become more resilient, cater to the digitally forward customer, and be future ready. India's financial sector is also rapidly leveraging advanced technologies to keep up with evolving customer expectations, ensure faster turnaround, and offer a frictionless yet secure end-to-end service. In fact, the booming digital lending sector of India is predicted to be worth $350 billion by 2023 after growing at a scorching pace. To understand how digital transformation is driving India's financing revolution, I have with me Rajat Verma, Commercial Banking Head at HSBC India, Ramaswamy Iyer, the founder and CEO of Vayana Network, and Archit Gupta, the founder and CEO of Clear. Gentlemen, appreciate you joining me here on The Making. Thanks very much for your time. Ram, let me start by asking you, from the start of your journey in 2016, when you founded Vayana, to where we find ourselves today with the kind of digital acceleration that we have seen, what have been the key milestones to your mind that have helped us chart this transition?
So I think multiple things. 2016 demonetization, spurring off all kinds of electronic payments. 2017 introduction of GST, enabling a lot of trade data to get captured. 2020 the introduction of e-invoicing. And now an NBFC account aggregator. I think India has been a success story of public infrastructure coming in and helping lending to kind of lending, credit, payments, everything has to kind of go right up to the last mile. So I think each year almost has been a milestone. And of course, COVID was a big milestone in itself. I think we discovered, if anybody wanted to stress test our models, I think that it was the perfect 2 years into stress test. So I think that was great.
Well, yes, I think everyone's passed the stress test with flying colors. There was the risk as well as the possibility of accidents in the financial space, but that hasn't been the case, and that really counts for the resilience of the sector. But you talked about some of the key milestones, and those were the milestones as far as the public infrastructure side is concerned, the digital pipe, so to speak. But let's talk about what we've seen happen on the regulation front. There have been many changes, and in many ways, regulation has also kept pace with the innovation that we've seen on the infrastructure side. November 30th has been a crucial milestone, with the RBI also changing the guidelines as far as digital lending is concerned. How is that likely to change the landscape? How is that likely to change the complexion of the sector going forward?
So I think, look, RBI has basically been reiterating a whole bunch of guidelines it already had in place, or circulars it had already in place. I think in the fintech sector we have been kind of not kept up to reading some of those guidelines, and I think it was just a reiteration of all those guidelines from an RBI perspective. And I think if you couple that with a bunch of things that happened in the not so great on the retail lending side, I think RBI just came down and very clearly spelled out the rules for everybody. So I think from that perspective, I think a lot more clarity has come in. Having said that, I think the only thing all of us require, whether it be banks or fintechs and to an extent even regulators, is consistency. So we just need to kind of understand what's a specific role that people expect us to play. Tell us the rules and the the guardrails that we need to submit ourselves to, and I think that's really what we should be held accountable for. And I think I just believe that over a period of next few months, RBI will probably come out with a final set of circulars that will help us to kind of very clearly chart out that this is what fintechs will be able to do as opposed to regulated entities. And I think that will be welcome definitely from us.
Yeah, I would imagine that predictability and consistency is something that fintechs will be looking forward to. But Archit, let me address that issue with you. Many fintechs at this point in time are looking aspirationally at an NBFC license. NBFCs are looking at a bank license. And of course, there's a whole plethora of other licenses in between. But as far as Clear is concerned, you've moved your journey from Clear Tax to Clear now. What role do you believe you see yourself playing in this landscape?
Right, Shereen. So one of the key things that we think about, like first addressing the question of the fintech evolution, I think the key thing is picking a lane for most fintechs and NBFCs, right? Pick a lane and like double down on that lane. For example, our lane is that we are a technology platform, and we think like we are best suited to partner with the banks and NBFCs, and that is how our scale will come. So we've picked a lane that, look, the RBI has expressed clear clear lanes in terms of like, hey, regulated entities and data entities, customer entities, and what have you. So our goal is like to sharply focus on being a technology platform and digital platform and scaling that up and getting customers to reach us, and helping banks capital to reach customers at scale. So that's one. Coming back to the clear tax to clear question, that has been a massive journey in terms of starting from digital taxes to, as the panelists mentioned, right, the digitization of GST, which was digital taxes, digital invoicing with electronic invoicing, digital way bills. The account aggregator stuff is helping get access to bank accounts and GST data for lending purposes and what have you. So that scale is coming. So from our perspective, we started with one product for digital taxes, and now we have 7 products which serve massive number of customers on different problems. We serve like about 4,000 large enterprises, which are like largely public companies and what have you, and about 400,000 small businesses, medium-sized businesses, which are like smaller businesses for different kinds of problems. So but the consistent digitization agenda which India has is helping us scale our business and continuously offer digitization and technology and credit to Indian businesses at scale.
Rajat, both these gentlemen here representing the fintech side, quote unquote, supremely optimistic about the decade ahead. And Rajat, we've been over the course of the making through our 3 seasons, been talking about the digital transformation journey that India has made and the kind of opportunities that it throws up. I want to understand from you where we find things in terms of partnership and collaboration in this current growth phase between fintechs and banks.
So, firstly, I sort of share the optimism that both Archit and Ram have mentioned around not just the optimism, but the sense of sort of almost pride in the way that the Indian tech stack has developed, in the way that the government and other bodies have encouraged an open architecture. So, that's absolutely fundamental. And to answer your question, Shireen, that's probably led to the kind of thought process and fintech industry that we now have, which is very robust and is trying to solve different parts of the various problems that we've spoken about. So I think partnerships are absolutely fundamental to the way that banks need to also operate. There's absolutely, I mean, clearly banks need to have a lot of understanding of the problem set themselves, but equally solutions are out there in the industry, and perhaps there is less value in recreating the wheel for every financial institution, but to work with partners along the way to be able to solve all those problems, because everybody has their niche and their strengths to which banks can work and take advantage of. So we're already into several partnerships with fintechs and with like the treads or the other sort of systems that are coming up as public goods infrastructure. So we certainly feel that this is there is enough and more space left. Ram spoke about 1 crore MSMEs just being on GST, and another 4 or 5 crores not yet on it. I would add to that even the 1 crore, I don't think that all of them are served to the extent or even to a reasonable fractional extent at the micro end of that channel.
Ram and Archit, I want you to comment as well on this ecosystem impact that we're talking about and where you see future collaboration and partnership and the need for future collaboration and partnership, Ram.
Yeah, so if you really look at it, the real mom and pop shops, the 40 million out there, really need interest rates that today the largest companies get, less than 1% a month or less than 0.5% a month, because that's what the margins are in their business. They really need the interest cost to be very low. Now, I think the biggest thing that fintechs like us can do with banks like HSBC and Rajat is to help them to kind of reduce the risk premium that they have for lending out to these mom and pop shops, reduce their cost of servicing these small ticket loans, reduce this cost of identifying these the right borrowers from that lot. And I think if we can kind of be that eyes, ears, distribution chain for the large banks who have low cost of funds and who possibly can lend out far cheaper than they're lending out today. And we can change their cost economics of doing that and still make it very profitable for them. I think that's really the role that we can play. And I think that's the role that, at least from a Vienna perspective, I am very interested that we play. That's one. And the second is I think, fintech as a general, I think perception is all about software, technology, systems, artificial intelligence, machine learning, and all those fancy terms. I think the fundamental thing we will need as we go down this chain and talk to 40 million guys, mom and pop shops, is empathy. And I think that's really, that's one area that I am at least personally kind of very trying to focus on. How do you build empathy into this old model of lending out to? Because these are guys who probably, at the slightest shock, will not be able to repay or will have some stress.
Now, if I may
Well,
add,
yeah,
Shireen, sorry.
yes, Rajat, go ahead. Go ahead.
No, I think it's a really interesting point that Ram raises. To get the cost of financing down for the micro segment, and one of the prerequisites for that is the cost of transaction, the frictional cost of transaction, which I think we are on a really good path, basis all that we've discussed on this call. The other is the cost of credit. I mean, in India, if you follow what's happening to the credit journey, the wholesale credit, which was the problem, let's say back in 2016, 17, 18, is now a fraction of what it used to be. And lots of steps have helped in that, the SMA model, the bankruptcy code, and all of those things. And that is no longer the problem for the banking sector. But if you think of where MSME default rates are, they're still quite high, and they are not trending down. So whilst we say that there's information collateral and there's this massive amount of credit that is being served by unorganized lenders, etc., and that needs to move into formal system, we do have to solve the problem of credit here. And we have to make sure that what we call information collateral, which is what you'll get from the segment that Ram refers to, works well. It has worked in other sectors. So am I optimistic? Yeah, I am optimistic about it. It's worked in, let's say, microfinance, because they had a certain hypothesis which has been tested over a period of time. But you do need a hypothesis, because if you end up with 10, 11%, the objective of lending reasonably and cheap, because debt itself will become the overhang on a micro or very small businesses, and that itself will be the downfall of those businesses. So you must get the cost down, but for that you have to get it back under credit control, without which this won't work.
Yeah, I think that's a very important point that both Ram and you raised. Let me get Archit to comment on that and extend that a little further to talk about some of the headwinds or the challenges that you foresee, Archit. We've all talked about the opportunity as well as the significant headroom for growth, but what do you believe are the key challenges that a company like yours is faced with at this point in time?
Just address the question of the fintech and bank collaboration, and then head on to the. So in my view is I think, and that also ties into your question of headwinds. I think fintechs generally have an advantage on reach and technology. So those are the two big advantages which fintechs will bring, right? Like reach, technology, and to a degree data. But the data advantage still has to play out, right? The reality is mixed, because as Rajat mentioned and Ram mentioned, right, information based collateral hasn't necessarily led to lower statistically lower NPAs at scale, right? The 11%. I think the compression in the BNPL consumer industry is a very strong evidence of no data led advantage working out at scale and meaningfully, because when that model has been pressure tested and stress tested, it has not stood up. We have a different hypothesis here at Clear, a global hypothesis, if you will, that generally, unless you are a very scaled horizontal NBFC, where you are committed to the NBFC and technology is supporting, maybe you are a new bank or you are or a new kind of a credit card, maybe that is a model which may have sustenance. Otherwise, we believe that a vertical SaaS or deeper SaaS uh, coupled with financial services is a much more scalable model for fintechs and leads to deeper collaborations with banks, because then what happens is you have a sustainable business model on your technology platforms, and reach is paid for, and then you're monetizing on top. So the monetization could come in the form of payments, monetization could come in the form of lending and what have you, and other financial services, and that creates incentives which are longer term and not just on the core valuation drive that that the 2021 leading up to the bull run had, like where people had deployment targets and AUM targets rather than having like technology advantages, technology modes, like having the right business model which is aligned to the country's regulator. And so you saw all sorts of divergence, and like that now to a large degree is going away. Fundamental questions are being asked in terms of what are your modes, what are you bringing to the customer, how are you adding value. And if it's just financing, I think that to me is a big question mark, right? Like, because you're not the you don't have advantage on cost of borrowing, you don't have
Yeah.
advantage perhaps in physical digital infrastructure, which Rajat talked about. So I think like those questions, we have a strong point of view that the right collaboration requires the fintech to have sustainability, to partner with
Mm.
bank and create a right compounding business model for the next 10 years.
I think you raised some very important existential questions, and let me get Ram to comment on that, and then I'll give Rajat a say as well. Ram, this is I think these are important questions that many are asking at this point in time. What are the eventual moats as far as these fintechs are concerned? What is going to be the future and the nature of partnerships with banks going forward? And more importantly, what is the path to profitability? What does monetization today look like for this industry?
I think, look, I mean, at the end of the day, I think for any business to survive, you have to be relevant to your customers. And in the fintech's case, I think especially in models like ours, where we actually work with banks and with small businesses and with large corporates, I think all these customers have to find us relevant. And I think one of the big headwinds really that I think, really is required in this business. We talked about all the great factors, but I think one of the big headwinds is to just make sure that people feel comfortable about technology. People feel comfortable, and I'm really talking again about the 40 million people. I'm not talking about the 40 million mom and pop shops. I'm not talking about the large corporates. So I think the key for us, at least, has been very simple. We think that there is a huge volume. As I said, there's about $120 billion of trade credit required every month. And even if you were to take very, very small portion of it, exceptionally small portion of it, we just think in terms of volume plates and sufficiently easy part of profitability. I think the key thing is to remain frugal ourselves. I think one of the challenges of the startup is to try and ensure that we don't, become the source of the cost to our customers. And I think that's really the key thing. Otherwise, we will just be replacing one intermediary with another. So I think as long as we do that, and as long as we find banks, I think that the only issue that I think fintechs will have to kind of consider is not to become sourcing agents for banks, because I think that's a business model that I don't think banks will find long-term value with. Once a customer has been sourced, once a customer has been serviced by the banks, they know the customer, and frankly, they have the relevance to the customer. I think the key thing really for us has been that how do we make sure that the business of the customer keeps on improving. And as one of my colleagues told me, our business is only to put more money in the hands of our customer. So as long as we kind of stay focused on that, I think banks and other customers would want to kind of keep us in the game. And if we can be frugal enough, I think we can be profitable pretty easily.
Okay, well, I don't know about how easy it's going to be. Rajat, you want to take a stab at that? How easy is the path to profitability? But more importantly, to both what we heard there from Archit as well as from Ram, where do you see this, this collaboration, this partnership evolving? What is the ask as far as banks are concerned from fintechs at this point in time? And also as far as HSBC itself is concerned, take me through where things currently stand in your own journey to use technology to be able to reach out to the underserved customer, and what next is on the cards as far as the aspiration is concerned.
Yeah, Shireen, I'll first, we are a very large wholesale bank in the country, as you know, and a lot of our effort in using technology for our client base has started with that segment. So things like universal transaction banking to help the trade finance journey, virtual cards for corporates, digital receivable factoring, account opening seamlessly, signing documents seamlessly, etc. Started with a corporate bank. The reason I mentioned this, although your question was around the underserved, is because essentially the philosophy and the technology is transferable. And a lot of the work that we've done will get transferred into the MSME sort of world itself. So it's important that banks like us have a good stack of products with our internal sort of systems or our core banking platform, which are enabled to be able to accept seamlessly the volumes that are coming. Now, the corporate volumes are relatively small, but when you go to the sort of underserved, or which is clearly an important goal for us, I think the fact that we've got these stacks already ready will help us significantly. Of how fintechs may help us, I think that's I've mentioned this before. I think partnerships in areas of their strength, we find that different fintechs have different things that they can offer to us, and our approach has been that we partner with them where there's a mutual sort of coincidence of needs, wants, etc. Uh, and uh, and I think Archit made the point that we're not only looking at solving the financing challenge, we're looking at solving the frictional challenges in transaction banking, in exports and imports, in foreign exchange, etc., etc. These are all problems that MSMEs also face. And we have to look at this holistically, this whole problem system holistically.
Well, Rajat, Ram, and Archit, thanks very much for joining us here on The Making to take us through where things currently stand as far as India's fintech future is concerned, and more importantly, the targets, the goals, and the hypotheses that you're working on to ensure that we continue to scale and gain momentum from here on. Always a pleasure speaking with you. We wish you the very best of luck. Thanks so much for joining us here on The Making. That's it then on this edition of The Making. For now, from all of us here on the team, goodbye and many thanks for watching.